All right, so good evening and welcome to today's class. Okay, so today I want us to look at something from control accounts. All right, yeah. So that is what we'll be looking at today. So I'll be sharing the screen so that you see what I do as we continue. Okay, yeah. So then, I know control account is something that sometimes students have a little challenge with. Okay, so I want us to settle that. Finish that first. Okay, so control accounts, yeah, that's what you're looking at today. I'm sure maybe of course you are familiar with this, but I just want to remind you of some few things. We'll just rush through the theory part, and then I'll go straight to the calculation so that we look at how to go about it. Okay, so the control account refers to an account that takes the summary of all transactions posted into an individual account in a given ledger. Okay, so we have what we call the sales ledger control account and the purchase ledger control account. Okay, but then these are like the mother ledgers. There are different ledgers which can be opened. Okay, let's say the debtors ledger, let's say returns inwards ledger, let's say the cash book. Okay, so all these ones can be summarized into one and then be placed into the control account. Okay, so the control account is supposed to summarize the whole account for you so that you understand how to go about them and all. Okay, so now that's the essence of the control account. Okay, and also to make corrections in the account. Okay, so and also make sure that there's no fraud. So as we move on, I will explain some of these things. So that's the purpose of the control account. One, to locate error, okay, and provide a summary of the total debtors and creditors, cross-check to avoid fraud and all that, right? So these are the kind of control account. We have the general ledger, and then so these are some of the control accounts, okay, like the subsidiary ledger, sales ledger, and debtors ledger, and all that. So the sales ledger can be called the debtors ledger, and the purchase ledger is what the creditors ledger. Okay, so a debtor is like somebody that owes you. Okay, so when you sell on credit, because what you are selling on credit, those who sell to they owe you, so we call them what debtors. Then when you also buy on credit, those who buy from they are what your creditors, right? So this is just a basic foundation for you to understand what the control account details will come up with as we move on. Okay, so we have the receivable or sales ledger control account. Okay, so with the sales ledger control account, we can also call it the debtors control account. Okay, and the payables control account can also, or the purchase control account can also be called the creditors control account. Okay, I'm just rushing through all this because I want us to get to the calculation. Okay, I need to ask you some of this. So this part is very important. Okay, so here you have a sales ledger control account, which I said is also called what? Debtors control account. Okay. So sales in its original form as the credit balance. Sales as a credit balance, in the sense that when you sell to somebody on credit, you credit your account and what you debit the person. So you debit the debtor. That's why I call it a debtor. So you debit the person, okay, and then you credit your sales account. But when you open a sales ledger control account, it's not like you open a sales account. Okay, the sales ledger control account is a debtors control account. Okay, so everything that increases debtors will come to the debit side. Everything, because debtors has a debit balance, and then the sales as what a credit balance. So when I say sales as credit balance, I'm trying to say that anything that will increase sales will come to what the credit side. Okay, and anything that will reduce sales, okay, or credit. Let me see. In this case, you are talking about credit sales. Don't forget that we come to the debit side. Okay, so that same thing implies here. So here, this is what a debtors control account. So even though it's a sales ledger control account, it is also called what? Debtors control account. So see this account as what? A debtors control account. See it like that. That will have open account for a debtor. So the sales ledger control account is actually for what? Your debtors, those who owe you money. Okay. So in that case, when you sell to them on credit or when debtors increase, it is what? A debit. So anything that will increase the amount that they owe you, okay, anything that will increase their credit to you, okay, will do what? Will be how do you call it? Will be debited, and anything that will reduce it will be what? Credited. They get it. So so don't forget this. In the sales ledger control account, everything that will increase the debtors balance, okay, or that will increase the amount that they owe you will be debited. Anything that will reduce the amount that they owe you will be credited. Okay, good. So look at this particular format that is there. Okay, you have to take note of it very, very well. It's very important. So in this particular case, you see that there are two balances, debit balance and credit balance. That is very, I mean, it's very possible. Okay, it's possible that your debtors can have both credit balance and debit balance. It's possible. Some cases there are something like that. Okay, and sometimes it can be just one. So as you go ahead and you try to solve I mean, some questions, you understand why. So in the question, they can give you both credit balance and debit balance. So when they give you something like that, just write it there. The debit side, you just write the debit there, okay, as balance go down. Then write it there. The credit side too, that one too, you have it there. So you also what? Just write it there, okay? Yeah. So, and then you have sales. So, you know, sales, when you sell to somebody on credit, you credit your sales account and what you debit the person. So as I said, anything that will increase the amount that they owe you or the person owes you, or will increase the debtors account, will come to the what? Debit side. So whatever debit or debtors is increasing, you debit. So when you sell to the person on credit, you do what? You debit the sales ledger control account, which is also called debtors account. Okay. And then when you sell to the person retains the thing that you sold to the person as a maternal mouse, 100 cedis, and you return some. So when you return some, meaning it has reduced the amount that you owe me. Let's say initially you owe me 100 cedis, but you return 20 cedis worth of goods. So it will reduce the amount that you owe me, and because it will reduce it, I will what? Credit the account. Okay. So when the sales returns, credit it, and then cash refund. Okay. So if you are sold to you and you pay me, and when you paid me, I've refunded the money to you because I think maybe it's kind of the money and now there's something wrong with the money, and then that becomes what? A cash refund. I've what? Given your money back to me. So it's increased the amount you owe me. So if you owe me 100 cedis, okay, and then you came to pay me 50 cedis, and now an account, so you pay 50 cedis, and now you are left with 50 more to pay. And now I said, okay, it's kind of now I want you to come and pay me all my money, and I give you back 50 cedis. Now you owe me 100 cedis. So if I return any cash you paid to me, or when there's any cash or bank refund, it increases what? The amount that you owe me. So that becomes what? Or that's called the debit side. Then you have cash or bank. Okay. So cash or bank means that when you pay me my money, you owe me now, and you pay me. When you pay me, it reduces the amount that you owe me. So that comes here. Now you have bank or discounted checks. Okay. So if you give me money, you give me a check to go to the bank to go and cash, and when I go there, the bank says, "No, we will not accept this check because outdated or postdated, or I mean, there's something wrong with the check, so they will not accept it." It will increase the amount that you owe me because the check you give to me wasn't accepted, so it will increase that. So that becomes the debit side, and then there can be also discount allowed. So if I give you a discount, you are my debtor, and I give you a discount, it will reduce the amount that you owe me. So that's the credit side. Now, interest on overdue balances. If you are supposed to pay me and then you don't pay me, okay, on time. Let's say I said, okay, pay me in the next 1 month. Otherwise, I'll charge you interest of 10% on the amount that you owe me. So if you pay me within that 1 month, I will not charge any interest. But if you don't pay me in that 1 month, then I'll say, okay, then anything beyond that 1 month, I'll charge you 10%. Okay, so that amount that I charge increases the amount that you owe me. So that becomes what? Or that is required as the debit side. And then we call something what? Balance set off. Set off means that maybe even though you owe me, I also owe you. So let's say you owe me 100 cedis. Let's say you owe me 100 cedis, right? And then I also owe you 50 cedis, okay? So you owe me 100 cedis, I owe you 50 cedis. So we'll set it off. And then I'll say, okay, because the mechanics and middle car 50 cedis, until there, let's set it off. Until 50 cedis. So that 50 cedis that you owe me now becomes a set off. Okay. So that one will be recorded at what? If anything. Because that 50 cedis is not a set off, you record it at what? The credit side. Okay. And then when you go to the purchase ledger control account, you record it at what? The debit side. Good. Now we also have what's called bad debt recovered. Bad debt recovered. So all the because you are not here, you cannot ask questions, but when you come back or when you watch this recording, you can ask me any question on WhatsApp, maybe audio or something. Ask me any question, and I will answer you. Okay. So bad debt recovered means bad debt actually is like when you can see okay. So that's what we call bad debt recovered. So that one, it increased that, how do you call it? It increased the amount that you owe me. So it's recorded there. But when there's any bad debt written off, it's a bad debt. But I said, okay, we shall well, a bad debt about what yeah, it's a very reduced amount in owe me. And then we call there's something called bill receivable. Receivable dishonored. I didn't take it. So it still increased the amount that you owe me. So I mean, I'm trying to explain all these things to you. Then the bills receivable is if you pay me my money, that one is what reduce the amount, it comes to the credit side, and then it's like that. And then here you see that there's balance carried down and balance brought down. Now, when you set it off, I mean, when you do your calculation, it depends on that, and then you see the figure to put there. But at the end of the question, you see that they will say, let's say at the end of the year, let's say 31st December, the sales ledger control account as this balance, and the debit and the debit side as, they will see the sales ledger control account as this balance, let's say credit balance. So because it's a credit balance, you will record it as well the debit side, and then so balance carried down becomes what debit side, or let's say credit side, and then the balance carried down becomes, or it's recorded as the other side. Okay, I mean, if you didn't any question, you can ask me. Look at the theory part. So the opposite of the other one is this one. Okay, the opposite side becomes this one. So look at this particular definition diagram very well. Okay, so I mean the format. So this is a balance brought down, the same thing. But this one I see with the sales ledger or the debtors control account, anything that increase the amount that the person owe you is what is recorded at the debit side, and anything that reduces is recorded at the what credit side. And that's the complete opposite is this one. For this one, anything that increase the amount that you owe the person comes to the credit side, and anything that reduce the amount that the person owes you, I mean, it's recorded at the debit side. Okay, yeah. So the same stuffs now, but yeah. So that is about that. And then this. Okay, yeah. So I want us to look at some other question. Okay, possibly. I want us to look at some question. Let me see if I'll see it here. All right. So look at this question for instance. In this particular question, for instance, they didn't say that the person has what? How do you call it? Both debit balance and credit balance. But they give you what? Sales ledger control account, and they give you just one balance. And then the purchase ledger control account is only one balance. Okay. So when they say sales ledger control account and the balance is what? In the sales account is what? Credit side. So on the debtor side, it will come to the what? The debit side. Okay. So you record this one on the debit side. Okay. Let me see if I can write. I don't know if that is possible. Okay. So let me see. Will this work? I hope so. Okay. So this is like the sales ledger. Okay. So this is a sales ledger control account. All right. All right. So with this particular example, look at the sales. They said what? The sales ledger balance. Okay. So the balance in those sales as so if you record the sales account as of credit, the debtors is what? Debit for them. So this one will come to the debit, the balance. Okay. So this was like what? The balance go down. So that I don't cover the figures. Okay. So like balance go down. You know how we do that. This thing is the pen is too thick. So it's recorded here. Okay. Which is 9, 2, 2, 5, 0. Okay. I mean, let's just manage this. Let me see if I can make it a bit distinct for you. All right. All right. So then we come to what do you call it? Then we come to the purchase. That one is the purchase one. So let's look at about that. And now if you like, you can open a second one. Okay. this one is different. So this is kind of like say, no, this is not what I want to do. I wanted a pen. Okay. So this one is a what? The purchase ledger control account, which can also be referred to as wait, why is the thing vanishing? What is happening? No, I'm not looking for vanishing. I'm looking for a pen. Oh, no. I'm not. Just stamp. Sorry, okay, sorry. I'm so sorry about this. I'm trying to get a pen. All right. It's still a line. Charlie, this thing is becoming difficult. So I'm finding it difficult to find a pen. Okay. What I'm seeing here, they're all. But initially I was using it. This is that's I want to create something. And this vanishing pen. So when I write to go back, I don't want. It's difficult. Charlie, I'm finding this very difficult. So. Charlie, so I don't think I'll be able to draw. Okay, so so like that. I mean, I'm not finding the how do you call it. So you just go through this, okay? When you go through this one, and then you find some of the items. Okay, so I think I've seen. Look at this. So look at this. This is a sales ledger control. You just have to make do with this, okay? Account, and then this is the purchase ledger. Oh, what is this? Control account. Okay. So like I made the first one, this is the balance for down. Balance for down. Okay. And it is what? 9, 2, 2, 5. So and then when you come here, it comes to this side, okay? The balance for down comes to this side. And that one is what? 8, 4, 1, 1. So hope that's clear. Good. And then come you see the sales ledger, okay? So sales ledger it increases, so this becomes what sales. You've done a sales what on credit, right? Sales on credit. So that one comes here, and that one is what 1, 1, 0, 2, 1, 0. Okay. Then you come to this side. I say sales ledger, purchase journal, right? So that will come here. That one will also be like purchases, okay? Purchases. So let me just PUR. So that one comes here, and that will be what? One, zero. So look at the difference between the two. With the sales one, anything that increases it comes to the what? The debit side. But with the purchase one, anything that increases what comes to the credit side. So know the difference between the two. What am I even doing? Okay. So it continues. Look at discount received. Discount received. So with the sales, you only receive something when you buy. So meaning discount received is a sales ledger item. So because you are receiving a discount, it's reducing the amount that you owe. Okay. So let's say discount what received. And that one comes here, right? Which is what? 4,500. 4,500. All right. I don't know what I can solve this. I can solve it and give you the solution so that you look at it. I mean, very well. This one, I'm just trying to do a rough work. So don't worry at all. I can solve it and give you. So discount allowed. You can only allow, you can be allowed the discount when what, this was discount received. Sorry. So this is supposed to be, this is supposed to come here and this cancel because this discount what received, discount that what you have received. So you can only receive a discount when you are buying purchases. So this is supposed to come here. Okay, so this is supposed to be discount received. So what I read there is rather supposed to come here. Okay, so don't worry. I said I'll solve it and give you the solutions. So just this is supposed to just give you a rough word and give you discount what's allowed. Hey, what is this? You know, there's a software that we can use to do this. There's a board, but I don't have that board actually. So you just have to make do with this one. So this is 3, 8. It's no fun. I mean, this is a rough work, okay? They come to a return invoice. So return invoice, you sold something to somebody and the person returns it. It's what? Reduce the amount that the person owes you. So what? Return inward, okay? And that is what? 87, 87, 0, and 0. All right? Good. And then we go to what? Return outwards. Okay, that one, like when you bought something, you bought something and you returned it. Okay, so it to use the amount that you owe. So because of that, that one also comes here. Return outwards. Okay, and that one is what? 5, 4, 0, so 5, 4, 5, 0. Sorry. So 5, 4, 5, 0. Yeah. And then bad debt written off. Okay, as you saw, bad debt written off, it can be bad debt is a purchase item. So bad debt written off, it can say it's what it will reduce the amount that the person owes you. Okay, so it comes here bad debt written off. So which was bad debt? Banduka, so bad debt and that. That one is what 6, 7, 2, 0. And then cash sales. Cash sales doesn't appear anywhere here. Okay, we don't record cash sales here. Then check received from better. So people have bought a check. So when they bring check, of course, it's reduce that amount that they owe you. So check. Check. Check receipt, which is what? From your debtors, right? So it will use the amount that they owe you. So it comes here. 7, 5, 6, 0, right? Then check from suppliers. That one also use the amount that your people owe you. So that one comes here. Check. Okay, same thing. Check. So that one also comes here. 6, 0, 5, 0. Then we can look at refund. Refund Let me go down and see what's there. Refund what to customers. Okay. So Nipa do and the person came to pay, but you said no. You really like the money, so you returned it. So it increase the amount the person owes you. So see refund to what customers. So this refund, oops, refund comes here 1850. Okay, good. And then what else do we do? Interest charge to. So the interest they owe you did not pay. So this interest it's increased the amount of the person owe you. I explained it during the list. So somebody owes you, the person didn't pay early, and because of that, you charge the person interest. Cash purchase still doesn't happen. So with the sales ledger and purchase ledger, you're only dealing with what credit, sales, and purchases. Okay. Now check this annet. So check this annet also come here. Okay. You can see this annet check. Okay. That one also comes here, and that is what 570. Then bills is receivable. Okay. When somebody pays you, bills receivable, they can or shower. It comes there. So you have to know what goes to the sales. So anything pertaining to sales go to the sales ledger or debtors account, and then anything pertaining to purchases go to the purchase ledger control account, or what you call the creditors control account. Okay, this is 25400. Okay, pardon me for this. Yeah. And then bills payable. Okay, so this also reduces the amount that we owe the person. So bills payable. Okay, bills payable. So this amount that you owe them. So that one comes to this side. And then I skipped provision for bad debt because that one also doesn't count. So take note that account receivables and provisions for then for that debt doesn't count. Okay, good. And then set off. So the set off it reduces here and also reduces here. Okay, so set off comes here. In the sales ledger, set off comes to the credit side because it reduces the amount that the person owes you 0, 0. And in the purchase ledger, it comes to a debit side. So you see the difference between the two. So this is set off. So while it comes to the credit side of the sales ledger, it comes to the what? Debit side of the purchase ledger or the creditors control account. So so look at this. It said on 1st January there were credit balances of this and this. So when what they said there were credit balance. So meaning if they were credit balance of 3,800 and 4,210 in the sales ledger and purchase ledger respectively. So meaning with the sales ledger there was a credit balance of this. Okay. So because they said there's a credit balance, you have to bring what a balance carried down. Sorry, a balance carried down here. Because they said it's a credit balance. So there'll be a balance carried down which will be at the debit side. Okay. So if they say at the debit side, look at when it got to say credit side, we bring it towards the debit side. And if they are set the debit side, we bring it towards the credit side. Okay. Why? Because we want to get the because the figure they're written there is the balance brought down. So you bring a balance carried down here. So the balance carried down becomes 3, 8 what 0, 0. Okay. So when you finish and you balance, oh shit, when you finish and you balance everything off, okay, there will be a balance down. There'll be a balance carried. There'll be a balance, okay, brought down because because the credit was there was a credit. So now that I think I will try it was credit. So the balance they written there was a credit balance. It was a balance brought down, not a balance carried down. So because of that, you have to take it to this side. The balance carry down to this side and bring the balance board down here. Then when you finish, you do everything. The other one to come here. Okay, but I will not sum it up. And then here they said what there was a debit balance. Okay, of what this one was a debit balance. So you bring it to the credit side. Okay, So this is what balance carried down. Sorry, see, balance carried down of what? Of 4, 2, 1, 0. And so when you finish and then you sum it up, you sum this side and this side up, there'll be a balance because they said what? A debit balance. Okay. So now I one debit balance. The balance board now is what tells the balance, okay, of what? 4, 2, 1. So then you sum everything here and send it here. So yeah, that is all I can do. I mean, it looks nasty, and I mean it's not so nice, but yeah, this is a rough work. I'll try and solve it and send it to you. Okay. So yeah, this is where we end it. We'll continue another time on a different topic. Have a blessed evening. Okay, good.